Can you guys see the video clip? I guess. Happy Monday, everyone. Welcome to another episode of Hacks, Tips, and Tricks for Real Estate Agents. I am one of your hosts, Holly McCrory, team lead of Empower Real Estate Group. Actually, we're now in San Angelo, Dallas, and Houston. We just picked up Houston recently. And actually, today we just picked up someone in Charleston, South Carolina. So Texas and South Carolina now, which is really exciting. Two-time icon agent with eXp Realty, known for selling 100 homes per year in a small town of less than 100,000. And then starting this podcast now. It's been, we just hit our 1 year mark, so very exciting. I've got my co-host on, this way, Casey Stiers, downtown guru of Raleigh, North Carolina. She really works all of North Carolina, though, so if you have any needs there, you can hit her up.
Yeah, I also have an agent in 30A, that's in Florida as well. So,
we're covering a lot of the South right now. And then today we've got one of my good friends and my go-to lender on here, Thomas Von Der Ahe, out of Dallas, Texas, but he can help in a ton of different states. And we're going to be talking a little bit about, what differentiates Thomas. Of course, I'm going to let him, tell you guys a little bit about himself, but really we're going to be focusing on different ways that we can partner, real estate agents can partner with lenders and really utilize them for networking, for marketing, for events, all of the above. And then, of course, a little bit of the state of the market too, since it's a little crazy right now. So thank you, Thomas, for coming on. We really appreciate it.
Of course. No, thank you for having me. And I mean, congratulations. You two both have hit so many milestones. I'm honored to be invited onto this podcast and excited to kind of share some information, hopefully, bring some new agents, some tips, tricks, get them a little bit more business, teach them different kind of marketing pieces, and just hopefully just drum up and, start growing their current portfolio.
Absolutely. I'm going to put a little ticker here at the bottom with your Instagram handle. If you want me to put your email or different, let me know. But yeah, thank you.
It all comes to the same place.
Yes, perfect. So Thomas, tell us a little bit, give us the spiel, give us a background on you, what your position is, company, kind of getting into real estate. We'd love to hear it all.
Of course. Yeah, no, this is something that I like to tell all of my clients this when I first get on the phone with them, just because I feel like not a lot of people know much about the lending space. I feel, very fortunate to have the ability to teach a lot of first-time home buyers and really walk them through the process. But the number one thing I always like to share with them is the main difference between what we call retail lending and wholesale lending. So I've worked in the retail side. That is the Wells Fargo, Rocket Mortgage, Chase Bank. That's that side of the industry. And they're pretty much given a ideal applicant that they're looking for. And so what I quickly learned is working on the retail side, if your client doesn't fit in that perfect little puzzle piece box that bank is looking for, you're not going to get what they're advertising, they're showing people are getting. It's unfortunate, and I think it's a little misleading, but that's just the fact of the matter. So switching over to the wholesale side, we actually have mortgages that we purchase in bulk. So it's like the difference between going to a supermarket versus Costco and Sam's Club. So we get the best rates because we can shop around with over 130 different lenders. We can figure out what bank is going to, or what lender is going to give that ideal applicant their best interest rate and product and program. And so we're able to basically take all those savings, pass it on to the client, and it works out much better because we're always able to find a program for these people rather than turning them away out the door or just, getting them into an interest rate that they could have found something better for. So that's the difference that I like a lot of my clients and a lot of agents to know is you're losing out on business if you're working with these retail banks just because they don't have as vast of programs, whether that be a primary residence and it's a first-time home buyer to a seasoned investor. These investors, they get to the point where they've got 10 mortgages, and these sponsored enterprises that purchase mortgages, they don't allow you to have more than conventional loans. So that's where these investors come to me and say, hey, I need a different type of loan. And that's where we can then help serve them. So there's a lot of different things we can do.
It's been amazing. I've had clients shop around, and it seems like you're always beating out, whatever other rates or the programs, whatever it may be. Just the fact that you can pull from so many different ones, and then you guys also have like the wholesale aspect of getting those rates. It's been amazing. I always compare it to, so another guest we've had on is Tyler Gibney, which is actually who I met you through. Shout out to Tyler.
Shout out to Tyler.
Yes, he's with Goosehead Insurance, which is another, like an insurance broker where they're able to pull, not just from one company, not just from a Nationwide or a Geico. They're pulling from all different companies, and they're able to get you the best rate that way. So that's kind of how I view your team and you.
Exactly. No, that's the best way to look at it. We just have so many different products and programs from, every lender of mine probably has, I would say, anywhere from 30 to 50 different programs. And I have 150 or 130 different lenders. So, you can clearly see how many different, options we have for our clients. And I mean, you can look it up on Google. The statistics will speak for themselves that on average, working with a mortgage broker or an insurance broker, on average, we're able to save clients about $9,000. So it's, pretty big savings, and that really can make or break whether or not you're qualified for a home or a product or whatever the case is. But, it just puts a smile on my face, and that's why I'm in this industry, because, getting to be the person that shares that good news to get that family or couple the keys to their home. I mean, it's an unbeatable feeling.
Yes, I agree. We agree.
Yeah.
I was just kind of thinking, I'm like, you're like the Google Flights of the lending process. Like, instead of everybody going and looking up each of the rates at each airline, they just go to Google Flights now. It's like, you are the Google Flights of the lending process.
I might have to steal that line from you.
No, I was like, I like that line.
Sorry, what'd you say, Casey?
I like that line.
That might have to be a social media post.
I think so.
I think it might be.
Okay, so let's dive into maybe like the approval process for you a little bit more, because we chatted a little bit on the phone earlier, and you had just kind of talking through that. There were some good little hacks, tips, and tricks that you kind of mentioned in there.
Of course, yeah. So, I mean, from a realtor's perspective, here's what, and I'm not, directing this, only towards me, but from a realtor's perspective, here's what I think you should actually look for in your lender. The first thing is not necessarily them working remote, but the ability for them to work anywhere that they are, just because, as y'all know, things happen quickly in our industry, and you need a pre-approval. You need clients to be qualified when when that time comes. And so having, a loan officer or a mortgage broker, whatever the case is, having them be able to work for you around the clock, I think that's probably the number one thing you should look in your loan officer or mortgage broker. I mean, it speaks for itself. Having that person that you can reach out to at a Sunday night at 10 p.m. and say, I need a new pre-approval letter, trying to submit an offer. That time is going to close in a couple hours. And so having the ability to have that person 10 out of 10 times of the day, I think that's probably the number one thing you should look for in a broker or a loan officer. The second thing is communication. I try and send out not necessarily daily, but I try and send out at least bi-weekly updates to the buyer's agent, the listing agent, and also the borrower. So everyone knows where in the process we are. Everyone's on the same page. There's never any hesitation or, I feel it also avoids the seller getting cold feet, getting a little worried, stressed out. It just makes every step of the process an overall better and happier experience.
Yeah.
So I think constant communication is going to be, those kind of go hand in hand, but I think constant communication is huge. The next one that I, specifically my company like to do, we actually don't just pre-approve our clients on a purchase price. We pre-approve our clients based on percentages. So as I'm sure you know, and a lot of realtors here do as well, when we're approving clients, we're going off of something called a DTI, or a debt income percentage. It's going to be your income divided by all of your debts and liabilities that you're required to pay for every single month. So the difference between my company and most others is we qualify based off of that debt to income percentage on the back end. So you as the realtor, Ali, I'm sure you've jumped into my app and you've seen your clients' pre-approval letters, and one property might have slightly higher property taxes and a really low HOA. However, the next property has a really high HOA and somewhat high property taxes. Whatever the scenario is, you're actually able to jump in and slide those numbers around, adjust them, and see if that client is still pre-approved, which is, for my perspective, makes my life a little bit easier. It's just a little bit more work up front that we have to do in order to get that. But on the back end, you're laying awake at 3 a.m. and you want to see if that client's pre-approved for a house that you just saw on Zillow. You're able to see that even if I don't happen to be available at that time. On the flip side of that, you can also go, house hunting throughout a day from house to house to house, and you can just do a new pre-approval letter based on each individual purchase price. So you never have to worry about, showing the listing agent that your client is overqualified for a home, which just reduces your negotiating power.
Right.
We understand that. So it just definitely makes it a little bit easier. And then the last thing that I would say that we like to do, everything is all automated through our system. So when clients take an application, it doesn't just ask them question after question. It actually goes through the application like they're having a text conversation. So it's really simple, really seamless. And then based on the criteria that they input into our application, it'll auto request documents. So, let's say they've got their W-2s on a paper copy. They can just take photos with their phone directly through the app. It'll convert it to a PDF and shoot it straight over to me. So definitely, there's a lot of timeliness and kind of, it's all about the user interface. And that's what I would say.
Absolutely. Yeah, especially in this day and age post-COVID.
Yes.
Exactly.
I like the fact that you can do it from house to house. That makes your life easier, because that's one of the biggest things is, okay, reach out to your loan officer, tell them this is what we're asking, or it's just one of those things, and then you got to wait on to send over the letter. And
well, and that's
exactly
that would come in handy if you didn't, like around here, it works a lot. If the agents know you, they know that you're not going to waste their time.
Yeah.
But if you're a new agent and they don't know you, if I see that, I'm going to I'm going to need that pre-qual letter before I'm going to do anything. So.
Yep. Yeah. And actually thinking about this, one of my best hacks, tips, and tricks, especially, if you're a buyer's agent, before you even write an offer, I like to make sure personally that the buyer is aware of what the monthly payment is estimated to be before we put an offer in. Because I've had it on, like when I was first in the industry, I had to learn that the hard way. Or even, being a listing agent, I see it where people don't realize what their monthly payment is going to be, just because it's, it's fine just because it's under their like pre-approved amount. But then when it comes down to it, it's, they see what it is and they say it's too high, and we're already, we've wasted 12 days of a contract being off market. So make sure you always get with your lender or your mortgage broker before you put in an offer, or plug it into a mortgage calculator if it's just weird time. But it seems seems like it would be straightforward for buyers, but it's not at all. So just something to always double check, in my opinion.
Yeah.
I mean, I will agree with that. I mean, right now with where the market is or rates are going, you never know what your interest rate is going to be in that very moment. So definitely reaching out to your loan officer, confirm, hey, the numbers we still went over a week ago, are they still pretty current? Are they still pretty accurate? And making sure they understand. That's something I always like to do with my clients. And then, when we are submitting an offer, I always like my agents to CC me on that offer. I like to listing agent know that, that client is fully pre-approved. I've gone through, I've vetted them, I've put them through my rigorous underwriting process. So we are, unless something changes, we are guaranteed to close. And then also turnaround time that also definitely does influence that offer and make it a little bit stronger. Being able to close in 14 days looks pretty attractive, considering the fact that if you're looking at a pre-approval with someone that has 3% down versus an all cash offer, that's going to be a slightly less offered price because they can close in 10 days. For the listing side, it's kind of nice to say, okay, let's take another 4 days for closing. However, we can get XYZ amount more on the back end for our purchase price just because we went with someone that's actually, going through and getting a loan because they're qualified for a little bit more.
Right.
There's a lot you can do with it, but I think definitely having your loan officer kind of support that offer, 10 out of 10 times, I think that helped win the deal over.
I think so too. That's something that I do. Instead of even including the pre-approval letter, that's nice. I've just been, actually, I haven't been working with many buyers, so I shouldn't say. In the past, when I have been working with a lot of buyers, I will CC the lender so that the listing agent has their contact and can reach out to them. It's just another form of, more communication, more transparency. We're not trying to hide anything. You can contact this lender at any point with questions. You have their information, so you can ask any questions. And then if you want a pre-approval letter, they can reply to the email and shoot it over. So
exactly.
I think
it may sound crude, but I don't care if I'm annoying the listing agent by my constant updates. When the time comes and the seller says, hey, where's the loan coming? How's it coming in process? That agent knows exactly where it is and they have an answer. So it makes the listing agent look better too.
Yes.
At the end of the day. So.
I did. The other day I had buyers and they already had their lender in place, Thomas. Otherwise,
That's okay.
But it was so funny because so I was trying to negotiate, a temporary lease for them or something where they could, start moving their stuff in, just with their daughter's school and work. They needed to actually move in, on a certain day. And actually it was the day they signed, but the builder was kind of, they were doing a bridge loan. So it was a 3-day right of rescission. So they weren't actually funded until we signed on a Thursday and it didn't fund until the next Wednesday. And the builder was like, no, we need, something, it's fine, whatever. But the listing agent, I kept bugging him, I guess, I'm like, can you ask about this? Can you ask about this? He was like, he sent this big long text about, this is how it started off too. I don't mean for this to sound rude. I'm like, if you have to start off like that, it probably is rude. But he was like, I don't mean to sound rude, but you just keep asking the same questions over and over, which I wasn't. And I've got a lot of listings on my plate as well as building on my own and blah, blah, blah. I don't have time to keep asking the builder all these questions and stuff. I'm like, I'm just trying to communicate. I'm not asking the same question, as an agent of the Texas Real Estate Commission, I am legally obligated to ask you these questions, and you're legally obligated to answer. Yeah, that's basically what I said. And I was like, the time it took for you to write that text, you could have just called or texted the builder and asked one more time. And then of course he did, and we got it. So I'm like, I don't if people are going to get annoyed about us over communicating, that's our job. It's better to over communicate than under communicate. Don't ever feel like that you're annoying someone because you're just doing your job. I'm like,
Exactly.
that's it. You
All-
don't have to be ugly about it.
Always over communicate versus under communicating. I mean, we actually just had a home go under contract early last week, and we pulled out of it. We were still we never even got to an official option period. So we put an offer in. The listing agent never even, I mean, they said it was accepted, but never got the contract back over to us until I think it was Friday. It was almost a week that they were sitting on this contract. And at that point, we had blown through quote unquote option period. And then finally, when they got their clients to sign it, the buyer's agent that I'm working with said, you know what, I'm already getting a little bit scared, and they weren't in love with the home. It was just a really good deal. And so we ended up pulling out of it. So it just goes to show communication is everything.
Mm-hmm.
Yep. Absolutely. Absolutely. Oh man. Yeah. I had to tell that story at some point. I'm like,
Yeah,
that was such an unnecessary text. Like, or just, it's nothing to get annoyed about, in my opinion. And and you know what, and I'm going to continue doing my thing and communicating like I do. And if someone doesn't like it, then that's their problem.
Exactly. I
couldn't
mean,
be more true.
biggest thing, especially my big thing is when agents don't answer their phone, and I'm just like, what are you doing? Like, house or no?
Trying to show your house. Okay, so I want to kind of move into kind of our main theme of this podcast. How real estate agents can benefit from partnering with lenders. So I don't know, Thomas, do you have somewhere you want to start with this, or like programs that you offer, and then we could talk about other ways that we can partner, or
Yeah,
is that okay?
absolutely. Yeah,
Okay.
I'll
'Cause I
kick
know,
it off.
I want to talk about that Curb Hero program too.
Of course. Yeah, I mean, partnering with a lender, I think, is pretty ideal just because, you don't get as many clients as realtors do. Because most people think, I want to buy a house. First step of that process, I'm gonna find a real estate agent. However, they end up turning that client right back around to a lender of their choosing. Most of the time, just because you need to get pre-approved. As an agent, you don't know what type of home to look for until you have at least a number to go off of.
Right.
So, partnering with a lender is great because, the few clients that we do get, or I wouldn't say few, but the clients that we do get, we like to get them seated with, a realtor. And so when we do get those clients, they're pre-approved, they're ready to go, ready to make that move. We need someone to send them to. And so if you're partnered with some lenders, you're definitely gonna, have the ability to take in some new clients. On top of that, I think one of the biggest pieces of partnering with a lender is just the security. If you are just looking for buyers and they say you already have a lender, you don't know what that lender's process is. You don't know if they're, if they've gone through and they've underwritten that client. You don't know if they're gonna be horrible communicating. You don't know if they're, they say they can close in 21 days. However, it ends up being 35 days. You just don't know what it's like to work with that lender. So having someone that you've partnered with and that you trust and know are guaranteed to get that deal done, it's going to make you as a real estate agent, it's going to make you look better in the long run.
Yeah.
And we all know as soon as you look good, that opens up the door for referrals, new opportunities, and reviews and raving new clients. So I think that's probably the biggest benefit of partnering with a lender. Aside from that, like you said, we do offer services to our different real estate agents. We like to partner with them for, lunch and learns, or teaching new home buyers, or, going to title companies and picking up new clients. I know we do a lot of events at title companies to find old clients that are, this may sound crazy, but finding clients that are recently divorced. Most of the time, when you find a divorced couple, unfortunately, they don't want to stay in the house that they're currently in, and both of them want to get into a new home. And so that's, that's two deals on that side of things. Again, unfortunately, but it is something that, you can at least make them both really happy by putting them into somewhere else. And then we also offer things like you said, Curb Hero. So it's a sign-in link that we partner with agents, and they can basically throw an iPad right in the front door, and anytime someone walks in, they sign in. It gets all of their information, which is a little bit better than like a paper sign-in sheet because it requires their email to like actually be verified. And then it'll ask them pretty basic questions like, hey, are you working with a listing agent, or I'm sorry, a buyer's agent right now? If they answer no, it'll automatically text that person all of your contact info. And it'll say, hey, are you pre-approved? If not, it'll text them all of my contact info. So there's definitely, there's a lot of benefits to actually partnering with a lender, which I can go on and on about that.
Yes. Yeah. So here, I'm in San Angelo right now, and I know it's the same, all over. A lot of times, agents will partner with lenders on open houses even. So you could have that Curb Hero there, but also have the lender there. So people can literally come in and talk about the finances. What would my mortgage payment potentially look like on this house? And, that's a loaded question, of course. So it'd be nice to, have the lender on site, just straight up for the knowledge that you guys have. I personally lean on you heavily because I'm not the finance expert. You are. So yeah, it's like when you have clients come into a house and they're like, oh my gosh, do you know what the monthly payment like this on something like this would look like? We can use a mortgage calculator and give a general estimate, but it always makes me kind of nervous because there's so many factors that go into it. It's super hard to say. So for partnering on open houses is really nice. This is another example. I partnered, so I had an open gate, which is an open house on a ranch. And I partnered with the local Capital Farm Credit office here, and they gave me a bunch of brochures. They actually paid for a big charcuterie board for the event, and had this little wine glasses and sent wine and stuff. So they can actually a lender can actually send you little goodies to give out. And of course it's has all their branding on it, which is totally fine with me. That's one of my favorite ways to partner with a lender is open houses. But we've even done events. I've utilized Thomas. This really wasn't necessarily for my real estate business per se, but I'm involved with EXP Young Professionals, and we had a North Dallas event, and we had Thomas and our friend Tyler Gidney come and sponsor it. So that way we still, while you guys covered part of the tab, or actually all of the tab, you guys got value out of it because you got to come and talk to all these agents that we gathered together, and talk about your services, which I think it was good because, you got to talk about, you guys both are on the broker status where you can easily show how to differentiate, from each other. And we had a sign-in sheet just like regular open house, except it was with agents, and, gathered emails and stuff. And, we even actually on that one, we actually partnered with a up and coming media company in the DFW area, and they came and did headshots. So that was a super successful event. I think that's you could do that with clients easily. Come in for happy hour, headshots and happy hours, what we called it, and the lender sponsors it, and you have an event right there, and you have someone else to help you plan it and talk with everybody. So, and like you said, a good lender is going to make and a real estate agent, a good partnership, you're going to make each other look better.
Yes,
exactly.
That's the point. Trying to think of other events that I've done. Actually Casey and I, we did a happy hour. We did the same thing and had a lender sponsor it when I came to Raleigh the other day. And it doesn't have to always be happy hours per se. It could be any type of event. So Trying to think of other ways that I've partnered. Oh, a lot of times lenders have like they can make flyers for you and have like your listing all branded and stuff, and then has both your information and the lender's information on the bottom. That's been super helpful. And even just like having a lender partner when just for everyday questions about the real estate industry. I mean, Thomas, how often I message you all the time, just random questions. I feel
Yeah.
like.
You do. And I don't know if you're utilizing it, but I know a lot of agents on your team actually do. But my application is personalized. So when I text you like a link to send to clients, it'll have like your information on my actual application, which, just again, it makes you look all that much better. It's those little touches I feel like kind of just put the icing on the cake with new clients. They like to know that everything, there's a sense of security in that.
Yes.
That's the best way I can describe it.
Yes, for sure. And even if you do have those clients that are asking you, like, just give me a ballpark range. Like, I would feel more comfortable texting you, Thomas, and being like, can you give me just even the most general range to get this person,
Yeah.
interested. And I feel like there's workarounds too. Like if somebody's like a common, I guess, objection that I've ran into with buyer clients in the past is that they might be what they think on the borderline with credit score. And they're worried that doing a hard pull, like doing a full application in hard pull is going to, affect them negatively. And, I've talked to you about, just talking with the person and, making them feel more comfortable, like we talked about. And, even I feel like there's ways that you can do soft pulls on credit just to see if they're even in the general range too. So.
Yes. I mean, so we can always do soft pulls. Here's something for any agents that are listening. There's two things that I actually would love to share with them all that you should do anytime you get a new client. You need to tell them to do this. There's something called optoutprescreen.com. Hallie, I think I've sent you this link to fill out personally, but every time you get a new client, have them fill out that link. It's totally free. And it's an opt-out list. So it puts them on a national database for 5 years.
Wait, say that website one more time. I'm going to type it in the comments.
Okay, I can just paste it in now.
Okay.
Can you hear me?
Yes. Can you hear me? Sorry.
Yes.
I'm on my iPad today and it's a little spastic.
Oh, no worries. So it's literally, I'll tell you the website right now. It's Opt Out Prescreen. OPTOUTPRESCREEN.com.
Send. Cool. I don't think I've ever heard of that. That's so like, for example, like if someone applies with a mortgage company, like all their information gets sent out to all these people and then you start getting calls and other lenders start calling you and stuff. That's what that's preventing, right?
Exactly. So it typically takes about 5 days to become active. I've got a couple workarounds myself that I do on the back end. That's kind of a trade secret of mine that I like to hang on to, but opt-out pre-screen is awesome. Anytime a real estate agent gets a new client, tell them to fill it out. It takes maximum 30 seconds, but they're opting themselves out for 5 years electronically from credit card companies, from hotel advertisements, from extended warranties for cars, you name it. It prevents those calls. It's any spam call pretty much. On top of that, once the lender does go to pull their credit, they're already on that list. So their data will not get sold by the 3 credit bureaus. That is, I'm glad we got on this topic because every agent needs to know that.
Yes.
Yeah. I had never heard of that. So thank you. That's
I haven't either. That's awesome. Yes.
Yeah. Y'all have gotten so many clients that, they say they're just getting blown up. It's like 48 hours that you get calls nonstop from these lenders. They buy these leads from credit bureaus that sell them, and you are put in just an auto dialer. Trust me, I've worked on that side of things. You're just put in an auto dialer, and so you get called nonstop by these lenders and banks, and it's an unfortunate practice. We don't agree with
it. Oh yeah. Okay, now I'm blanking on how we got on that topic. I guess.
We were talking about,
like we were talking about the soft pull.
yep.
Yes.
Yeah. Okay. Cool.
So when I get a new client, I always tell them, we can do a soft pull, but the first thing I tell them is log into Experian.com, and there's something called an Experian Boost. Basically what it does is it takes, you've got your typical credit card that's going to report to the credit bureaus every single month, which that's great. However, all of your charges on, let's say, a debit card or even on your credit card, but the things that don't normally get reported to credit bureaus, like phone bills, Wi-Fi, power bills, you name it, all these little things, even like Hulu or Netflix, you pay for those every single month on time without fail. What Experian Boost does is it goes through all of your charges on your debit card, it pulls them all and reports to the credit bureau saying, Palette McCrory loves to watch TV and she pays her Netflix bill every single month on time. We would like that pause reflect on her credit. So that's another thing I like to do with my clients. It takes about 72 hours for that to actually hit your credit. But it's another way to just kind of boost their score right before you actually go ahead and pull their credit.
Yeah. Yeah. Okay, cool.
Yeah.
Okay. And how much does it really affect a person's credit score just by applying?
I'm actually going to ask you, how much do you think it affects their score?
I would guess, I want to say like 5 to 10 points.
Okay, yeah, that's pretty accurate. I'd say roughly around 3 to 5 points, which really isn't crazy. I get a lot of clients that it's going to tank their score like 70 points, and I have to kind of talk them off the ledge. Like, it's actually not going to affect it that much. Your score will go back up the following month, and then on top of that, if you do decide to shop around, let's say Wells Fargo pulls your credit, be scared to actually go inquire with other lenders and other banks, because you can pull your credit as many times as you want within a 45-day period. They call it shopping around. And it won't further affect your credit after that first pull. So that first pull is the only one it'll affect. You got 45 more days to pull your credit as many times as you want.
Yes, that's what I've told people in the past too.
Yep, that's amazing.
I thought it was. I always thought it was 90 days too, so I'm glad you just said 45.
Yeah.
So.
I thought it was 40 days. I was off by 5.
There's one bureau that is longer than the 45 days, but I like to tell my clients 45 days because that is the mark where it's not going to affect any one of the 3 bureaus, where, I just don't want to tell them something and then they, take that with a grain of salt. I want it to be fact of the matter. Yes.
Well, and we want them to get moving quicker too.
Exactly.
Love it. Well, and I guess another way, like, you can partner with a lender is kind of like what we're doing now. Like, well, video is, everybody knows video is king right now. You can do little just Facebook lives like this whenever there's, a rate hike or something happens in the state of the market that's affecting the real estate industry. Bring on a lender partner, go live on Facebook like this. We're using StreamYard, just if anybody wants to do like a setup like this, and just have a conversation about it back and forth. And on this, you can share it in different Facebook groups, different social media platforms. So utilize lenders for like education too. You could even do, like I've done, held home buyer seminars in the past and partnered with, a lender, an insurance agent, and an inspector on an event like that. And it's been very successful. And you could even do that on video too. So, oh, you know what, Thomas, I don't think we covered this, but you can actually help people in a lot of different states. I think like 40 states, I believe. Yeah.
So we're licensed pretty much. Yeah, pretty much nationwide. There's a couple states we're not yet licensed in, but pretty much nationwide. we're able to take in clients and get them qualified. If I personally am not licensed, pretty much there's someone on my team that is licensed there. So anytime we get a new client, we actually have a place to get them put into, which is really nice that we're able to just, serve anyone and everyone that we can.
Yeah. Well, and I've even, Casey is also, I'm like, wait, which way is this? Casey's also just started American Dream TV. If you guys think Thomas looks familiar, it's probably because he was on my first episode of American Dream TV with me. So that's another way that you can partner, like I'm saying with video. I mean, that's more on a larger scale, but I on that episode, I had my lifestyle little piece going to the Dallas Arboretum, but then we went to a house after, and I'm like, what do people want to hear about in real estate right now? And everybody's talking about interest rates. So that's something that I've partnered with Thomas on, bringing him into that episode and having him talk about, state of the market and stuff. Oh, we've got someone that said, Thomas is the best, one of the smartest loan officers I know.
So sweet.
So sweet. It just says Facebook user. So whoever that is, thank you. Thank you for Thomas.
I appreciate it.
Yeah, so it can be video, it can be events, it can be even social media posts, especially now that like Instagram, for example, has like the collaborator feature. Email blasts, you can do an email newsletter together, blog posts. I mean, use it all, and especially now that we can, shorten things and make things easier or more efficient, I should say, with ChatGPT even. So, yeah, just all different examples of ways that you can bring in a lender and help you, especially on that education piece. So really it's, I feel like the ways that we've talked about is networking, education, marketing. Right?
Absolutely. I mean, to circle back, I totally agree with you. And circling back to one of the things you said earlier is, partnering with a lender for open house, like a listing that you have, that I think that's one of the, obviously you need to get the people into the home, which, I've got some clever things that I actually want to mention to you. But once you get people into the home, I can't tell you how many clients they come to me and they say, I love this home. I went to the open house. I'm not working with an agent right now, but I want to know what my monthly payment is. And so, we run the number, actually go through their full qualification. They submit documentation to me, and I'll tell them, what their monthly payment is. And a lot of time they're shocked because they look at the listing on Zillow, and Zillow is accounting for at very minimum 20% down. And so when I tell them they can put as little as 3% down and grow their equity, in just time and when rates come down, they're blown away by how much more that monthly payment is. And then when I tell them what the 20% down is, it lines up with Zillow. And so there's just a lot of misleading marketing out there through all this automations. Actually having someone that personally, that you can trust and just reach out to real numbers, I think is so effective. And, even if you're posting about your listing, you can
that always happens to me at my house too. All good.
But yeah, no, just actually having realistic numbers so people aren't misled when, push comes to shove and they're ready to go under contract and whatnot. That's a huge, huge piece of it.
Yeah. Well, and the good thing with you is that you cover so many different types of loans. So like really we've been talking about mainly just, regular residential deals, but you do you can do fix and flip stuff, stuff for builders. So, you could kind of tailor marketing that way. If you have like kind of a fixer upper listing, you could reach out to Thomas and say, or make a post and say, reach out to Thomas. He's got fix and flip loans that are great for investors. So there's you can kind of, I guess, if you don't have a lender, which you should now, you can use Thomas, assuming you're in one of the 40 states he works. But, depending on the lender and what they do, you can, tailor your marketing or partner with a different lender based on what the listing is. So like another example for me personally, being in San Angelo, it's a very affordable market. A lot of people here use the 3%, 3.5%, zero down loans. So a lot of my marketing is, posting a link to my listing and saying, hey, down payment assistance and zero down payment options are available on this house. Reach out and let's get more info. And I can, set up an email easily and connect everybody. And, that adds a person to both my database and to your database. We've got 2 people following up on them. And, because we've talked and I know what you can do with those loans. So even like marketing in that sense, get to know your lenders and what all they can offer, because you might be able to promote different types of properties and get different avenues like land loans, or like we said, fix and flip loans, or construction loans.
Yep.
Well, and even depending on what your client needs, like I said, there's bridge loans, HELOC loans, just really depends on what you're trying to target. But yeah, lean heavily on your
absolutely.
or even pick their brain on what they think you should be posting to target, that type of audience. So
of course, we know about them too.
Yeah, and it can help you even break into a new niche. Like if you wanted to break into more luxury properties, like your lender's going to know, or they should.
They definitely should. I mean, you're spot on with that. Like, I can't see how many people they're like, okay, well, I want to do, I want to do a construction loan, or I want to do a fix and flip, and they're going the more like wholesale route, where this property is going to be on the market for a day and a half, and if you aren't making an offer, that you're missing that opportunity. I work with a lot of investors, and we've got fix and flip programs where if the listing agent is doing their job correctly, they've already ordered title work, we can close in as little as 48 hours. It's a super fast closing time frame, and it just allows them to basically purchase the property with as little as 10% down, and then spend the next 6 months fixing it up. And there's nothing holding them to keeping that loan. They're able to just sell it, make some money, and do it all over again. So we've got programs like that. We've got programs for jumbo loans. So, you're trying to break into, like you said, that more luxury market. We've got programs for that too. If you've got clients that are looking for, if you've got investor clients that are looking to purchase a property, they've got the down payment. However, their income doesn't cover that new mortgage payment. We've got things called a DSCR loan. So we can project the rental amount that they'll be able to, rent that property for, and use that as a qualifying income. So, just another way we can qualify clients. So there's a lot we can do there.
Yes. Love it. Okay. So we've only got a little bit more time left. I wanted to reserve some time to talk about state of the market, just with interest rates going up again, possibly going up again soon. Give us your rundown. You're so good at this.
Of course. Yeah. So Hallie, you and I, we've actually talked about this a little bit throughout the past week. In all honesty, this isn't something that I like to say, but I am expecting another rate hike, mainly because there's one piece of information that ties us all together. The Fed wants inflation to be at 2%. Right now, it did drop month over month, and we're hedging closer to that, but we're not going as fast as they're expecting. So, if we were to not do any more rate hikes, where I project rates to be, I would say in the 10% range. However, the Fed doesn't want rates to get that high. So what they're going to do is they're going to push, they're going to hike rates again. They're not going to go all the way to 10%, but they're going to go slightly higher than they are. It's going to force that's going to force the interest rates to go up a little bit. That's going to force the inflation to go down a little bit. And what that in turn will do is cause everything to shift. Rates will then start to head in a downward trend at that point. And hopefully property value starts to continue to go up. So all the people that have purchased these homes with these higher interest rates, they're going to start building a lot more equity. And then at that point, rates will start to come back down, and they'll be able to refinance and basically have made money back because
Yeah.
they were able to withstand a higher interest rate for, just a couple months.
Yep.
But at the end of the day, I think we are going to get another rate hike. As everyone's saying, we're going to look in the 10%. I think this rate hike is going to cause for us to hit that 2% inflation a little bit sooner. So then rates can start to come down and we don't ever get into the 10% interest rates.
Okay. Yeah, it's just something that we're dealing with post-COVID, and I feel like a lot of agents are worrying right now. But I think if you can just stick it out a few more months, it's like a rubber band in my mind right now. We're just pulling and pulling and pulling. Everybody's not everybody, but there's so many people just waiting for those interest rates to drop, and as soon as they drop, it's going to be like, bam.
I think rates are going to plummet. Oh, value's going to skyrocket. We're about to enter a extremely competitive market. From my personal opinion, that's where I think we're headed. I think all the people that are purchasing homes right now put themselves in such a strong position where they will have grown instant equity, where normally you're looking at, growing XYZ amount in the course of 5 years. I think that's going to happen in a much shorter time frame, which, again, that's another piece of information that allows you to get a better interest rate is having more equity in the property. So purchasing now with a higher interest rate, you can drop that interest rate later, growing equity at the same time, and you've got a better, what we call loan to value percentage.
Positioning yourself better in the long run.
Exactly.
Oh, well, let's
everyone says.
Yes, we're going to stick it out.
Date the rate, marry.
Do you think it'll happen at the beginning of next year, mid of next year? What's your thoughts on that?
I think we're going to see another rate hike within the next probably month or two. And I don't think it's going to be very far behind where we actually hit the inflation numbers that we need. And then as soon as that happens, that's when rates will start to come down. So best case scenario, I would say 4 or 5 months. Probably. Yes.
Yeah. So maybe around the new year-ish.
Probably around the new year. And then on top of that, we've got programs like the 2-to-1 buy down, which puts you in a position where you're getting that low interest rate. And then by the time it's time to refinance, you already have that interest rate, but now you're locking it in for the next 30 years. So there's a lot of different programs to, benefit from this market that we're in right now. In my personal opinion, now is the time to move and look at a purchase because,
Oh yeah, I know. I'm keeping my eye out right now for any good Airbnb properties, any good rentals. Just because I know their values are gonna skyrocket once interest rates go down. So I'm like, anything that looks like that has potential, I'm going to look.
Why not? It's.
Yeah.
In Raleigh, though, they kind of, in a way, lost their mind. I looked at a for sale by owner today that would basically be a tear down with this guy and a client of mine. And you would think if he was working with an agent, they would have probably averaged it for like 400,000 tops for this house, even where it's located. He's got it on the market for 1,250,000. I don't know where he pulled that number.
That's just beyond. It's just beyond.
That's like,
That's
wow.
Agents are working.
You really have some high hopes, don't you?
Everyone's going down their for sale by owner list. They're not even calling, not reasonable.
No. So,
oh God.
I'm not really sure where he got that number out.
Yeah, don't be that guy. Don't be that guy.
Don't be that guy.
Cool. Well, other?
If rates come down.
Yes.
I was gonna say if rates come down, you might not be too far off. But right now.
Yeah. Okay. So, any other last minute hacks, tips, or tricks, Thomas, that you want to share with our audience? I know you gave a lot today, so no worries if you don't. Or if you don't, any books that you like or podcasts that you like for real estate agents and other loan officers?
I mean, depending on what they're looking to do, there's the Bigger Pockets podcast. You cut out there for a second. Or did you say you're looking for different podcasts to listen to?
Yeah, if you didn't have any other hacks, tips, or tricks, if you like, because I know you gave a lot on this podcast already. If there's any other like books that you recommend for agents or podcasts, so yes, you were on track. And I'm
I
sorry,
think
my laptop's in the shop, so I'm on my iPad, and the storage is totally full on it. So I think it's lagging for me.
no worries. Yeah, for any of those investor clients, tell them to listen to the Bigger Pockets podcast. That is such a good resource. I've got a lot of clients that, I have one specific client. He came to me about 3 years ago or 2 years ago with like $30,000 in his pocket. We just helped him purchase his sixth investment property over the course of 2 years. We've just grown and grown and grown. And he listened to the Bigger Pockets podcast every single day. And it puts you in this mindset of just wanting to grow your portfolio, wanting to grow the amount of doors you have. And I don't know, they share a lot of really, really insightful piece of information. So that's probably one that I would recommend.
Somebody asked if you have a link where people can read about the attractive programs and incentives.
I don't have a specific link because a lot of our programs are so individually qualifying. I mean, I do have a link where people can price out interest rates themselves. Obviously, it's better to actually speak with me. I definitely do have a link that I can share with everyone, and they can actually price stuff out and see what it looks like.
Are you able to write in the comments, or does it just say private chat on your end, Thomas?
It just says private chat on my end.
Okay, why don't you drop that in the private chat, and I'll copy and paste it into the main chat where everybody can access it.
Okay, perfect.
Yeah, and that's Julia wrote that. Julia, if you message Thomas on Instagram, I bet you guys can set up a call. That's what I've done with Thomas personally, and gone through. He'll give you kind of a spiel on different programs and incentives and stuff. So definitely reach out for a one-on-one call.
Yes.
Please do. I'm always happy to chat and just, teach anyone about the different programs we have to offer. There's so much that it's hard to cover everything, whenever you want. But here, let me copy and paste this. So, anyone wanted to price out a loan, we don't have anything to hide. We're a really transparent company. And so we are more than happy to share that with everyone and show you, hey, this is what our pricing looks like. We have some of the best. And so we'd like to pass that on to anyone that wants to look at it.
Okay, I am copying, pasting that. Copy. Paste. Oh, well, now it's not. Is it joinedge.com? Is that what it was?
Yeah, it's just joinedge.com. It's more for a loan officer side of things. When people say, oh, we're getting shopped around, they went over to this company called Edge, we're not going to hide what our rates are. So we let people price it out themselves if they want to.
Yeah.
That's what that link is.
Awesome.
Thank you.
Yay. Well, thank you, Thomas, for coming on today. We appreciate your insight always, and for always helping us. Great podcast today. And
nice
everybody else. Yes. Yeah. I'm glad, Casey, that you got to, I guess, virtually meet Thomas. Mm-hmm. So, and a little fun fact about Thomas. So I have a little brother with Down syndrome, and he actually has a little brother with Down syndrome as well. But his brother is super famous. He was just in the Woody Harrelson movie Champions. And if you guys haven't watched it, it's one of the funniest movies I've ever seen. So yeah, go give that movie a follow, and his brother a follow, and Thomas a follow, of course, too. But yeah, just another little fun fact I like to share. But again, Thomas,
is. I almost
sorry,
of course. Oh, I was gonna say I almost made a giant poster of the movie my background. I was really debating it.
Well, that looks like a good background behind you anyways, so that's okay. Awesome. Well, we'll be on next Monday, you guys, so stay tuned. And we'll see you next week. And everybody have a great week. Thank you,
Don't
Thomas.
forget to follow us on
Yes.
Spotify and Apple. Yes, don't forget to follow us.
Yes, please. Yeah, and again, we're doing a contest right now for anybody that goes and follows us on either Spotify or Apple Podcasts and sends us a screenshot of following us. We'll give out a gift card. So go do that.
Thank you, guys. We'll see you
Thanks,
next week.
everyone.
Have a great week.
Thank you.
Bye.